I am absolutely honored and excited to have this fireside chat with Michelle Scarborough from BDC. But as you were about to hear, BDC is really part of a long journey. As many of you are founders, and she's been a VC, and she has resided all over the country. So really bringing a perspective from BC, from Ontario, from Alberta, and so on, as well as all the elements along the way, which makes her a very unique resource for all of you and for us to share, because there's so much more than just the BDC lens. And I think that that's really important, especially right now with where we are as a community in terms of our ecosystem, in terms of our country, and all the opportunity in front of us. As you've probably heard me say in the past, I really believe that this is Canada's time to shine in innovation and in entrepreneurship. And I think this is the golden era. I think it really began in the last 5 to 10 years, kind of when Next got started, and it is starting to accelerate. And this little bump on the road called COVID-19, I think it's causing companies to pivot and veer a little bit, but ultimately the strong are going to come through this, and this is going to be an exceptional period for accelerated growth as you come out of this crisis. And please don't misunderstand. I'm not making light of the crisis. It's terrible. It's troubling and a struggle. And quite frankly, when you put a global pandemic and a financial crisis together, it's really, really super tricky. But those who come out the other side, those who have repositioned themselves for the future, are going to be phenomenally successful. And I think this is going to be one of those periods that brings people together and really emboldens founders. So with that, I'd like to ask Michelle just a little bit about her past as a founder, and then the journey from being a founder and some of the elements we'll talk about being a VC. But let's just start maybe, Michelle, with your life and your experience as a founder.
Wow, my life. We could be here all day. Good morning. Good morning, everybody.
Good morning.
Just from a pure background perspective, look, I actually wasn't intending to be necessarily an entrepreneur. I was destined for medicine, and I decided that medicine was not the right place for me because I like to be creative. I like to build things. I like to bring people together to solve big problems and do that in Canada and globally. And so what I discovered was that really I was an entrepreneur by default and wasn't necessarily on plan. So I started my career in the energy sector and moved from the energy sector. Of course, I grew up in Alberta. So started my career in the energy sector and was really building technologies in the energy sector very early on in my career without realizing what the impact of that would be later. And then I switched into renewables because I thought, oil and gas is here and yeah, it's okay, but it's not really disrupting anything. And so what can I do to really disrupt and make the world a better place while at the same time making profits? And so I switched into renewables and solar energy specifically, built a company in Vancouver, and then the investors in that company, we ended up selling that company in the early 2000s after another sort of boom and bust in the technology sector. And at the end of that journey, my lead investor asked me to come over and join him in his family office. And he was interested in what I would be able to do with his portfolio of companies, given the fact that I had been through a bunch of ups and downs with this particular technology company at a very interesting time in the market. And so I joined his family office, and I was there for about 6 years doing turnarounds of his early stage companies, which were all over the place. They were, he was a big investor in life sciences and renewables and broadly in technology, mostly in software. And so I spent 6 years working with him, really understanding the inner workings of being an investor, managing other people's money, stewarding that appropriately, and also working with entrepreneurs and C-level executives to identify where the gaps were in their businesses and then to find alternative solutions for them, and to work hand in hand with the CEOs and management teams in order to drive success. And so we had a very good number of outcomes, a bunch of bombs as well, but that's to be expected. But at the end of the day, what I learned from him was, how do you steward other people's money? When you're an entrepreneur, you're stewarding it in a certain way. When you're an investor and you've got other people's capital, and there's an intention behind that to invest in companies, to grow those entrepreneurs, to grow those teams, but also to generate a return, what does that look like? And how do you do that in a planful way? And how do you do that in a way that is a win-win for everybody? And so he really taught me all about that. Fast forward, I spent a little bit of time as building a couple of venture capital companies of my own, or venture capital funds of my own, with partners across Canada, targeted again at disrupting technologies in various industries, energy, oil and gas, and so on. And at the end of the day, ultimately landed at BDC. BDC was an interesting choice for me because it provided me with an opportunity to do a few things. The first being that it was the bank for, and it continues to be the bank for entrepreneurs. And that really resonated with me because I've spent my entire career in venture capital working with entrepreneurs, helping those entrepreneurs be successful and really helping them to drive change, disrupt industries, and create something that was really new and unique that solved a real problem. And so BDC provided me with an opportunity to do that on a Canadian-wide scale, but it also provided me with an opportunity to do something that I'm also super passionate about, and that was work with women. I'd always been a mentor for other women as I grew my career, and had great mentors myself. And so I wanted to kind of do something that would pay that forward, and this gave me an opportunity to do that through building the Women in Technology Venture Fund, which we've done. So at BDC now, I do two things. I run the seed fund for BDC, and I run the Women in Technology Venture Fund with a team of really, really talented, really great people who have the same vision. And that vision really is to work with entrepreneurs to identify great opportunities that are going to disrupt, and then help those entrepreneurs take those technology companies and turn them into global success stories and Canadian champions for sure. And so this has given me the platform to do that. And it's been a really exciting 3 years so far.
So Michelle, when you were working with some of these turnarounds, which is tricky at the best of times, having run a couple, what were the key elements? What were the key characteristics that you identified what was broken in a company, and you saw and were able to bridge from, okay, this is broken, but this is what success looks like. What does success look like in a startup or a company that is getting ready to accelerate and have an exit? What are the key characteristics that you look for?
So the first is, is this team coachable, and are they aligned with where they intend on going? So do you see the big vision, and are you thinking practically about how you can execute on that vision? The second is that there's a market for the product or the service. So you've got a buyer or a potential buyer that is interested in trying out and or already buying your product or your service. Without that, the question becomes, is this something that someone wants? And is someone prepared to pay for it? And then the second thing that we always looked at with respect to some of these turnarounds was, maybe there's a couple reasons why this might not be working right now. Either the timing is wrong, there might not be quite a good product market fit, or there's so much competition in the marketplace for this particular product or service that you're getting washed away by all the noise of other people that might have more money, more capital, more resources, and so on. So what we would do is look at where there might be an opportunity to shift gears, to pivot, or to adjust behavior or adjust the technology slightly so that you can gain some traction. And that was done all through communication with the target market, going out and talking to customers and potential customers to identify where there might be a need, where the customer saw the potential opportunity for the technology and where they did not, and then to take that information back and with the team identify where there might be an opportunity to continue to move forward. So it was sort of chunky bits, less worried about the financial, what was on the balance sheet to support the capital requirements, as opposed to first and foremost identifying whether there was an actual opportunity, and then is this the right team to be able to execute, and to work with the team to help them understand what that actually looks like and what that means.
And so you would join presumably as a board advisor or as a board member in some cases. Did that give you enough ability to control the outcome and get to the success that you needed?
No, it wasn't our job to control the outcome. It was our job to advise the companies so that the management teams could make good strategic decisions with the best information that we had available to us at the time. So it was always a collective effort. And, venture capital operates exactly this way, right? So we work as a partner with with our companies, portfolio companies and others. And the intention with being a good partner is that we're working together to identify what the solution is. And if there is a problem, we're working together to solve that problem. So we were looking at things from sort of, a variety of different angles to try to figure out what would work best. But ultimately the decision would always land in the hands of the management team and their own gut. They're the ones that were the domain experts, and we're the ones that are coming in to provide them with I call it the gray hair advice. I'm happy to say I don't have any of that yet, but we can talk to you, Joe, later.
Yeah, no, I got enough for both of us.
You got lots, but that really was, we're a partner and an advisor, but ultimately the decision needs to come from the management team and from the executive as they're trying to make decisions, and our job is to be a good sounding board for that and to try to find, using our networks, other alternative viewpoints to help them make those decisions.
From that era, like I find that turnarounds are gut wrenching. They're really, really, they can be very hard. Is there one or two examples that you would point to that you're really, really proud of what you were able to, from the point of discovery of the problem and ultimate resolution and positioning the business to move forward and succeed? Are there one or two stories that you want to share that you're really proud of?
Well, I think, this is going to age me greatly, but most of those companies now are no longer around because they were all subsumed by other groups, or the technology was subsumed into other larger companies. But I think, maybe what I'll do is point to some of the attributes of what made them work really well. And I think the biggest thing that worked was, again, and I'm going to harp on it a little bit, but the team really understood what they wanted to do. They were aligned with the investors, and they were aligned with their customer base. And so when we went in, we were talking about, what needed to change in order to drive a result, there was a collective agreement and a collective vision on where people were going to sit in order to achieve on that result. And the result ultimately in both of the cases I'm talking about, or a number of those cases, was ultimately to be acquired at a good valuation, and then to kind of, take the assets, roll those assets over and maybe become part of a bigger company, or conversely exit that company and start a new one. So in a couple of cases, those entrepreneurs exited with, a fair amount of dollars in their jeans, and went on to start new businesses that have become repeat entrepreneurs. And so that's really cool, because when you're in those kinds of situations, turnarounds, for those that haven't experienced them before, are pretty tense and pretty stressful situations, and not unlike what we're doing right now. But it takes a lot of guts and a lot of resilience to want to stick with it. And in a lot of those cases where there was success, the management teams really wanted to stick with it and figure out what was the best thing to do for themselves, for the company, and the shareholders. So,
and when you move towards full-time VC, was one of those attributes, you talked about coachability, product market fit, but was one of the characteristics a multi-time founder? Were you trying to identify that as a potential characteristic?
No, we weren't actually.
Okay.
No, we weren't. We were looking for, with the family office first, but also even now, we look for founders that are see a big picture and that see an opportunity to do something different, to not necessarily disrupt completely an industry, but they see an opportunity to do something different, to be more efficient, to increase productivity, to do better. And those are the entrepreneurs, with that passion in mind that we like to see and that we like to back. If they're a repeat entrepreneur, that's great, but there are a number of repeat entrepreneurs that like to advise those kinds of younger entrepreneurs, provide them with sort of guidance as advisors or on the board levels. So I think it's just what is it that you're really passionate about? What is it that you're trying to solve? And that forms a big part of how we even look at companies going forward.
One of the things that I'm really excited about and makes me feel so good about our ecosystem is those founders that have had a good experience, even a bad experience, and they do want to pay it forward. And you've talked about mentorship and the important role that mentors play. And at Next Canada, we're blessed to have so many really committed, passionate mentors. Can you talk a little bit about the mentor role and the importance that it plays in furthering the success of a business, but also the founder development and ultimately the ecosystem?
Yeah, I think it's, important at all of the levels that you just described, from, someone who's in Next Canada, through to somebody who is, even building a 20 million, they've got $20 million revenue business and continuing to grow. Mentorship kind of follows along the value chain and the life cycle of the company. So important at all stages and for different reasons. As if I put my venture capital investor hat on for a second, I talked about being a partner, and that's being a partner and a mentor and a coach to the CEOs and the senior management teams of companies is a big part of what we do every day. But we don't know it all. And so what we also look for are, again, those other people, like, the mentors in the Next network and the mentors at CDL and so on, who have different kinds of experiences, different kinds of skill sets that they can bring to an entrepreneur, to a founder, and to their team. And so we'll often look outside of, our own little box, so to speak, for where those other people exist, where they might exist, even if they're not in Canada. The C100 has a very active mentor network in the Valley, and so we lean on them a fair bit also for people that can bring different skill sets to help, frame some of the thinking that has to go on, particularly when you're thinking about early stage and you're really trying to build your company and you're trying to figure out, how do I sell to, Rakuten? How do I sell to Oracle? What do I need to do to get into JP Morgan Chase product that I'm trying to get in the door there? A lot of mentorship can also provide that sort of, off the record advice to founders as they're trying to figure that stuff out, and do it in a way that is, a little bit less formal, a little bit more, let's go have a beer and just chat about it and figure it out. Or beer's not your thing, then whatever it is. But super important, and it's important, I think, for founders at whatever stage of development your company is at, to seek out those people also, to go find them and to look for the best of the best, because the more you surround, and this was certainly true of us and continues to be true of me, even as in the Women in Technology Fund, the more you can surround yourself with people that are way smarter than you, they're going to identify things for you and think about things for you in a different way that can inform some of your decisions. And maybe it's just you need to talk through what you're going to do because you've had an 18-hour day. So those are the kinds of things that we think about on a regular basis, and what I think the value of mentorship does bring.
I do, you mentioned CDL. They've been an incredible partner for us. C100, incredible partner for us. I had a very long call with the fellow who runs all the Zs for Ryerson, BMZ, DMZ. We all come together to support founders and to bring mentors into our midst because there's that rich experience. Do you find it different from one part of the country to another? So, for instance, CDL West, and they're doing an incredible job in Western Canada, and they're doing a good job in Montreal, an excellent job in Montreal. Can you talk about ventures in different parts of the country and how they might be different and how you might think about them differently?
Yeah, so I think the fundamentals of, we look at the fundamentals of the business to see what those fundamentals look like. Again, is there product market fit? Is there a great team? Is there a big opportunity or a little opportunity? What does that look like? Just if you put the venture capital lens on. But there are differences, and I think we talked a little bit offline about what's happened during this whole COVID crisis, and I think what's happened really is we've had a leveling of the playing field. Everybody's experiencing the same thing. We're all working from home. We're all having to deal remotely. And I think that's impacting some early stage and startup companies more so than others. We talked about Alberta, just getting completely slammed, not just because of COVID-19, but we got the oil and gas industry taking a big hit. So there's a province, and CDL Rockies, to your point, is doing a great job. And there's a ton of entrepreneurial resilience in Alberta, but they're going to need those entrepreneurs and those early stage startups are going to need a bit more of a helping hand, would be my guess. Atlantic Canada, we're seeing similar things. So we're sort of seeing different, I'd say different challenges for those entrepreneurs based on where they sit in the market and where they sit geographically. But I do think, to your earlier point, Joe, that there's an opportunity now to kind of reinvent ourselves and to take advantage of where we are right now to do a bit of level setting and resetting, and then to see where we're going to go and where the capital ultimately will need to be to support the best companies and the best opportunities that we see kind of coming out of this. And to your point, I think there is a real opportunity here, and we're thinking about how we're going to take control of that and lead it.
I applaud what CDL is doing and what we're doing in Montreal. We're looking at doing something in Alberta because there are so many really bright people graduating out of U of A in terms of artificial intelligence, and out of U of C in biotech and life sciences. There's just so much. And one of the things that we really want to continue to sponsor and bring into Next are people from different geographies and keep them in those geographies as much as we can so that they start to have an ecosystem. When you see, success stories like Jevon McDonald, when he sold his first company to Salesforce, he's now building Manifold in Nova Scotia again. And you want to see that continue. We want to see that in Saskatchewan. We want to see that in Vancouver and New Brunswick. The other area that we want to build ecosystems and also fully support is women founders. And can you talk a little bit about your initiative and what's working for you with female founders? Because they do bring, like in Next AI, one of the things as we go through the selection process, and we had like 900 people apply to Next AI last year. And one of the elements that really spoke to us is if a team came in and you had all these really, really super bright guys, and it was balanced off by a strong female influence, it gave that team a more well-rounded leadership structure. And they had a disproportionate amount of success in our programs. And to speak candidly about the Valley's got about 10% female founders, and at Next we're about 30 to 40% and moving higher. Talk to us a bit about your role and what you see as important to think about as it pertains to female founders.
Sure. So we, when we started the Women in Tech Fund, it was really with the overarching goal to do a couple things. The first was to invest in really great women-led companies, technology companies in Canada, that were going to grow globally. And by women-led, I'm just going to give you the definition because it's the definition that we use when we're making investment decisions. So by women-led, we mean that we're investing in a company where there's a founder or a co-founder who's a woman. She's either one of those two. She could be the CEO, or she could be in a senior level executive position, having been in that position for a minimum of 12 months. And what I mean by a senior level executive position is that she's a CTO, the CFO, she's the CMO and CRO driving revenues and driving sales for the company, and in a key leadership position on the management team. And we set that definition because what we didn't want to do, and I had seen this in my, both as a founder and as I was moving through my venture capital career, what we didn't want to do was preclude a woman who perhaps did not want to be the CEO of a company, but who was an absolutely terrific CTO. We do not want to preclude those teams from creating the right diversity dynamic, leveraging the capability of very smart women in those positions who maybe chose to be in those roles but did not want to be in the role of the CEO. And so we made a very conscious choice to do that. And what we've seen as a result of that in the market, and remember, so the Women in Tech Fund is now 3 years old. And what we've seen from the time that we started is a complete upswing in the number of women who are taking on senior executive levels in their businesses, driving different areas of the senior within the senior management teams. We're seeing those women also step up to participate in rounds of financing within their own companies. So they are maybe the CTO, I'll use the CTO as an example, but the CTO coming into the, we're moving through a round of financing with one company and the CTO is prepared to put her own money into the business. So not only is she prepared to be the CTO driving the bus with respect to technology, she's actually prepared to put her own skin in the game, which is like outstanding to see. And so what we're seeing is a drive towards more women doing what I've just described, more women starting companies in the technology space, looking out at where are their opportunities? Where are things broken? Where can we bring technology to serve and solve a big problem? We're seeing more women start to found companies, more women joining senior management teams, and the volume of companies that are coming through the door for us has not slowed down. So in our first year of operation, we saw about 1,300 opportunities. That number continues to be about the same. But I'd suggest that the thoughtfulness of how these companies are coming about, the problems that they're trying to solve, has actually become more focused, more unique, and more interesting from a venture capital perspective, for sure. So big, huge spike up and to the right, so to speak.
So as an example, you're on the board of Bridget. You have two very thoughtful, intelligent female founders battling it out very successfully in a male-dominated construction industry. Maybe you can use that as an example and talk through what you see as a board member and how those two have built their company and how they're running it so successfully.
Yeah, so that's a great example, and Bridget, they're also alumni of Next 36 specifically, I think. But there's a team of two very focused, very tenacious leaders who really know their market segment. They know the construction industry cold. And they know how to talk to their customer, and they continue to talk to their customers on a, right now, in the middle of all of this, a weekly basis, to keep in touch with them, to understand what they're doing and so on. But what they have, and the reason why we invested in them is, many layers to that. But at the end of the day, we saw a management team led by, Mallory and Lauren, who are very strong, who have very clear visions on where they want to go, who understand the customer need and are really able to drive the bus in that direction. And The other thing I'll say about those two in particular, and it's something that we see in many others now, is you know, when they saw an opportunity to develop another product because their customers were asking for it, they were very quick to assess the opportunity, to validate where they could go with that opportunity in the market. How big could that opportunity be for them if they were to put the dollars behind the R&D to do it? Bring that to the board, get decision, and off they went. And within a very short period of time, I'm talking months, not years, but a very short period of time, they had a new product in market being tested in beta with their existing customer base and getting enormous traction. And all because they saw an opportunity, they took advantage of it, they assessed it, got approval from the board to add that element, and off they went. And so, you know, there's a team that was able to really adjust and take advantage of an opportunity and go for it. And it's proving to be very successful for them.
When we think about the Valley, and this is one of the questions, and it kind of it talks. This is a question from one of the folks on the call. What is the real view on seasoned tech women? Maybe I'm not sure what that is really getting at, but maybe if you can discern, that'd be great.
I'm not sure what that's getting at really either, but yeah. I think seasoned is a difficult word. I think maybe what I can say is this, that, you know, there are a lot more, as we've said, there are a lot more founders starting companies right now that are women. There are also a lot more women that have got engineering degrees, degrees in science, that are starting to take leadership roles in technology companies. And by leadership, I mean they're driving the direction of the technology stack, or they're driving the direction of the technology development. And we see that now, you know, across our portfolio. So I'll give you an example of Catherine Dahl at Beanworks. Catherine is an accountant by background, saw an opportunity, did not have a technical background, identified a technical co-founder, and the two of them started Beanworks. I believe it's 8 years old now. And they've turned Beanworks into a very high growth business globally, really. Primary target markets are North America. But, you know, here's an example of a woman who saw an opportunity in her industry to fix a problem. Yeah. And found herself a technical co-founder to work on that problem, and has now built a very successful enterprise that is scaling very rapidly, and doing great things for her particular target market and meeting the needs of her customers. So that's kind of one example. Lisa Shields at FiSpan would be another example of a woman who's, you know, former engineer, worked her way through the ranks, saw an opportunity, sold that company to PayPal for, I think it was about 400 million that she sold Hyperwallet to PayPal for. I think that's the public number, and has now decided, I'm starting another company. So she started FiSpan again, you know. So in this case, a seasoned, if you want to say seasoned entrepreneur, but a woman who has founded and built a successful company doing it again. And so we're starting to see more of that, but I think that's going to happen over time. And to your earlier point, Joe, I think we're at the precipice of where we can take, you know, new opportunities now that we're, you know, we're coming through this crisis, but I think it's giving people an opportunity to really think about what they want to do and how they want to do it. And I think we'll see more of that happen as we go forward.
Almost impossible to predict the future, but here's a question that I have about the future. We seem to have one or two companies that rise above all others and don't exit to a competitor, strategic, whatever, and we call them unicorns or narwhals. So we seem to sell somewhere between 100 and 500 million, and then, you know, the founder starts over. What is it going to take for us to go from having one Shopify to having 21? How do we build unicorns in Canada and keep them in Canada and fund them in Canada and have them exit, through an IPO or however in Canada?
Well, I think, yeah, my crystal ball is broken, but I'll give you the Michelle opinion, and you can take it for what it's worth. So I was around in the early days of Shopify, and in the early days of Shopify, we had just come out of the 2008, 2009 crisis, right? I think we're at the point in time coming out of this crisis where we're going to have that opportunity. And it's going to be up to, we talked about community. It's going to be up to it's going to be up to the entrepreneurs to identify the opportunity. It's going to be up to capital providers to fund those opportunities and to continue to fund them in Canada. There's certainly enough capital in the marketplace. So I see capital as less of an issue, particularly as companies grow. Early stage still, seed stage, we still need to continue to work on that and play. And we play a very active role in that space, as do many others. But I think we're at a point in time where the next big businesses will be built in Canada. I'm not a big fan of the whole unicorn word, because I think we are and should be building big companies that are in that $200 to $500 million range. Getting to $1 billion with Shopify is absolutely terrific. But I think from an economic standpoint, we will see a lot more companies in the $200 to $500 million range in terms of business. And I think it'll be it would behoove people, I think, to reach for the brass ring, reach for the goal to get there, for sure. But if you only build a $200 million company, that's a huge win. Building a $100 million company is a huge win, particularly in Canada. And I think those companies, the employment that they're going to generate, the spin-offs that they're able to have, are what will continue to fuel the Canadian economy. And so I worry less about getting to a unicorn as I do thinking about how do we support the companies we have in Canada to be exceptional, to compete globally, to create a competitive talent base here, and to keep those people here so that they can repeat the process over and over again, both as entrepreneurs and potentially as investors in the next generations coming up behind us.
Well, that was the question, was how do we keep them in Canada? Because that's one of the mandates that I have for my company. Whatever it takes to stay Canadian, because we just don't want to lose them.
Yeah.
So I should ask some of these questions so that everybody's got their opportunity. I'm so sorry I'm hogging the airtime because I find your answers so fascinating. Ryan McKee, on the subject of talent, once we cross the line to re-enter normalized working world, do you see the skills and talents changing for startup technology companies, specifically at the leadership and management level?
So yes, I do. I think what we're starting to see already, and what I hope to continue to see, is more focus among the management teams. I think this has provided a good level set for companies to take a step back and have a look at what they're doing, and to figure out what resources they need and what resources they don't need. So we've seen a lot of sort of right sizing of companies happening over the last 6 weeks or so. I think from a talent perspective, what I think will be interesting for senior leadership teams is, given the new environment, the need for probably continued remote working, where we're going to see a change in workflow for teams staying at home or staged going back to work. I think the level of communication from the management teams will have to rise substantially to manage their remote workers, to manage the flow of information between teams. Obviously, if you've got an engineering and a product team and they're all working in different places, you've got to find ways to bring those folks together, so you can make sure that the engineering team isn't creating something the product team can't deliver and that the sales team can't sell. So I think we'll see a lot of those kinds of changes, and a lot more. What I'm personally seeing among our portfolio is a lot more collaboration, a lot more open communication among the management on key issues, and trying to address those issues head on, as opposed to sort of going into the corner and I don't know what they do when they go into the corner, but something, but not addressing them head on, right? So I think what we're seeing is more of that, the desire, because we don't have the time to be futzing around and playing politics. You got to kind of get to it. And if we're going to take advantage of opportunities and have an opportunity to do something really big, we're going to need to communicate. So I think that those are the biggest changes that we're seeing. So not necessarily in the replace of people, but in the way in which those people interact with each other.
So this is a question from Mahan Salehi. As it pertains to the startup ecosystem, what are some of the positive outcomes as a result of COVID-19's disruption? And looking ahead, where would you place your bets on what to build and where to spend?
So I think this is, as much as it's been hard for people to work at home and work remote, I think this has been great for startups, again, to level set. So, you thought you were going in a certain direction. You thought there was a big market opportunity for you. You were, everybody focused on the goal, driving the technology. All of a sudden, the world comes to a halt. What do? What it's done for many people, and I'm hoping, Mahan, for you as well, if you're in the space, is you've taken a step back and you've had a look. Okay, so is my product or service really solving a key problem or not? How relevant am I, and is my technology to solving something that my potential customer want to buy? Making those adjustments and making that sort of step back allows you to see where you might have a gap, where you might have thought you were heading in the right direction, but now you're not. And then what it's also done is it's had given startups an opportunity to now interact with their customer base on an intimate level. So I was selling into Compass Group, and now I'm having an opportunity to go to Compass Group because guess what? The retail and food services industry is now shut down, and talk to them about, we're in the middle of a crisis, but your people are going to have to go back to work at some point. How are you thinking about go back to work? How are you thinking you're going to engage your frontline employees on going back to work? And what tools and technologies are you going to use to do that? And I take that information back based on good customer feedback, and I go, okay, so what do we need to do? How do we need to adjust our technology? What can we do to co-create with our customer base to create something that will be super sticky for them when they go back to work and solves a problem for them now? So I think that's the opportunity that lies before all of us, including us as VCs, as we're starting to look out into the future. Again, my crystal ball's broken, so I can't give a sort of this is where we're all going to go. But I do think that, we used to talk a few months ago. It's funny, we used to talk about the future of work. And now I'm like, oh, the future of work just arrived. It's here. Thinking about remote working in different ways, thinking about how you manage workflow. What does your workflow process look like when you're working with teams that are in different locations that maybe come together for certain points in time, but in other points in time don't? We haven't really seen yet how we're going to stage gate going back to work and what that's going to look like. And so I think things that optimize workflow, that make it easy for people to work remotely and work in the office are going to be things that we're going to look for. Communications tools, obviously there's been disruption in every industry. So every industry is kind of on its head right now, trying to sort this out. But I also think there's going to be opportunities in things like supply chain, food logistics, water, things that would be considered fundamental to, you know, how we live on the planet. And then, you know, as we think about healthcare and how we receive healthcare through telemedicine, we've all seen telehealth explode um, in the last 6 weeks. I don't think that's going to slow down anytime soon, but I think it's going to change. And I think what we will see is more a bigger move towards things like personalized medicine, where we can do more things ourselves and then connect with a healthcare provider to make a collective decision on the outcome of our healthcare. I think that we'll start to see some of that as well. So just to give you sort of broad strokes.
Question from Mohammed Nayo. First-time founders and building a strong founding team. We've just seen massive displacement of all kinds of people who were fully gainfully employed, who are now unemployed. A lot of startups who unfortunately have kind of thrown in the towel. Talk about building a founding team and choosing a great co-founder to move forward.
So yeah, you're right. There's a ton of talent out there, and I think, you know, again, as we look forward, huge opportunity to build great teams, because the talent pool in the market right now is outstanding. Unfortunate, but outstanding. And so when you're thinking about building your team, the things that I used to think about and the things we encourage our companies to do is, you know, you want to identify skill sets that are complementary to yours, but not you. So if you're not a technical founder, you want to identify somebody who can bring that technical skill set to you, and who can be a partner in the development of the technology. The same thing with your finance, your you know, managing your finances. The same thing with managing your sales. We have a bit of a gap in sales and marketing professionals in Canada. I think that's, you know, probably still a pretty wide consensus on that. But we're starting to see more interest from people that are repatriating back to Canada that have great skill sets in sales and marketing from Apple, Facebook, Google, Uber, and so on. So there is a talent pool coming back to Canada that's looking to get involved in the early stage of the ecosystem and build a technology company. So those folks are out there also, and more of them are coming back into the country than I think we've ever seen before. From an attributes perspective, though, you know, and I'll park the legal and the compensation and all that, percentage ownership of the business at the founding team. That's a whole other Zoom that we could have on that. But I think the thing to think through is, you know, how is this person complementary to the team? What skill set do they bring to the team that we need to have? Can they lead? And are they going to be a good cultural fit? I think we often don't spend enough time thinking about the culture. We're so busy trying to put people in slots and fill a void that we don't really think about the culture that we're also trying to create. So is there a good cultural fit, i.e., do you have the same vision for the business? Do you have alignment around that? Do you have the same sort of objectives of what you sort of want to be when you grow up? Those are the things that, you know, are more heart-centered and softer skilled than what does it look like on paper. And those are things you need to spend time with a person to get to know. And I know in this environment, when we're sitting on Zoom all day long, that's a little harder to do. But it's super important to do if you want to make a good decision about who you want on that founding team, and understanding how you're going to be able to work together culturally and build a culture around you that takes you from, you know, 5 people to 105 people.
Well, I do like the idea of repatriation, and so many people have in the last few years, where there was the brain drain south or just away. Now people are coming back to Canada, want to be part of this ecosystem. Americans and people from Europe and the Middle East. also, I was lucky enough to meet with Marianne Bulger, who's built Prospect weeks before we all got into work from home.
Yeah.
And I guess she's been overwhelmed with, new people on her site, people who are looking for roles, people who are looking to access new talent. So please take a look at Prospect. I think she's doing a terrific job. I'm just wondering, as we close this off, talk a bit about maybe, because you've had such a strong career, not only nationally, but also private and public. Talk about the role between corporate Canada and the government, and how they've all come together, and how we're going to get through this crisis with kind of a public private partnership role.
Yeah, I think it's, again, we're in unprecedented times, right? So everything's been up for grabs. And what I've found really both interesting, but also I'm just like, yay, is that people are starting to really work together. Everybody's kind of come together and said collectively, okay, we need to solve this. This is crazy. And how are we going to do this? And some of the things that we're going to implement aren't going to be great, and other things are going to be stellar, but we've got to at least do something. We've got to try to work together. I think, and we've seen it in the banks, we've seen it in, Subway, who's offering up across Canada sandwiches to frontline workers. And so we're seeing this happen everywhere, grassroots all the way to the government. What I think will be interesting, and we're talking to lots of folks in corporate Canada right now, what will be interesting is how the corporations take advantage of this opportunity to digitally transform themselves now. So what corporations have also identified is, oh crap, we have a huge gap, and our legacy systems aren't going to keep up with all of our people working remotely. And our workflows and our supply chain and how we do procurement, those things are all changing because, it's not business as usual. So what we're hearing is an interest and a desire to work more with technology companies to identify where opportunities are for corporate Canada to shift. And what we're trying to encourage them to do is to buy local. So, if there's a Canadian technology company that, can be fast-tracked to a pilot, see whether there's an opportunity and a fit, let's do it. And so we're seeing a lot more of that, those discussions starting to happen. As we come out of this other side, I think, it's up to all of us to continue to promote the fact that we've got great Canadian technology companies at the early stage, startups, as well as at later stages. And how do we deploy that to Canadian customers and international companies that are landed and working in Canada? How do we get that in their hands? I think that'll be a big push, and certainly that's something that we're pushing for our portfolio.
So do you honestly feel is there a way that we can engage corporate Canada to start to think about looking at Canadian companies first? Because when we look at our healthcare system, so much of the resources that are in our hospital networks across Canada are European and American biotech companies, med tech companies, pharmaceutical companies, and whatnot. Banks are using IBM instead of whomever, right? So how is there a way that we can encourage more Canadian companies to think Canadian startup first? Because there are so many bright, talented, sophisticated people coming out of our university systems, building these great companies. I so want this to be a made in Canada story. Is there anything else we can be doing? Because I love that. That's a great way to close off our time together.
Well, I think, the biggest way to do that is, to champion those technology companies. Like, we champion our companies in our portfolio to the corporations, to encourage them to adopt the technologies or to at least look at it. Typically, and this is something just to keep in mind as we think about how to do this. When a technology is being developed, it's got to get to a certain point before before corporate Canada is going to look at it, or a corporation anywhere, it doesn't matter what location you're in. You've got to have certain attributes already built in, and maybe it's a first customer validation, or you've tested it in a smaller market like locally versus in a big installation. But I think what we need to just remember is that we need to make sure that the MVP is done, and that we've at least validated the technology before we start shopping it. Because if we shop it too soon, and it's not ready, you're going to hit a wall, and the wall you're going to hit, you might not be able to get back over. So what we want to do is make sure that the technology companies are building their technology, and that it's ready to, you're ready with the technology. It's in a place where you can have a discussion about what would a first implementation look like. How can we test this with you in a small way to see whether or not it works? And then if it works, we can move to a more commercial discussion, like you would under normal business circumstances, but accelerated maybe now, because there's a lot more eyes looking internally at existing legacy systems and figuring out what they need to do to digitally transform those. So that would be just my caveat with respect to the corporate stuff. But I think, Joe, you can get on the phone too.
Oh,
Have a discussion with some of the folks.
I'm with you. Listen, I used to push that when Layer 6 was still a startup and ultimately acquired. My friends at Flybits, I mean, they're doing a great job here domestically and now globally. I just want so much more of that for our country, and so much more of that for our startups. So then we never have to worry ever again about our founders, our entrepreneurs leaving the country. Because once they go south and they start to, open up new doors in New York or in San Francisco, they don't necessarily come back home. So I want it to be a Canadian story first, and then take on the world. And that's what I think they've done at Flybits is, okay, we've got Canada, now let's go to New York, now let's go to London, and they'll ultimately stay here, is my hope.
Well, and look at, Bridget is again an example, Canadian company growing, Beanworks another example, other side of the country, same. Blue Dot, who people probably have heard about through the media. Blue Dot, again, Canadian homegrown talent based in Toronto, but they were one of the ones that was the first identified the pandemic spread. So we can thank them, or we can yell at them, however you want to do that. But but they figured it out, and now we're working with them to determine how to prevent this from being as aggressive as it is as it has been now in the future. So I think keeping Canadian talent here would be terrific. I think but we do want to recognize that to build Canadian champions means that they are going to be selling in Canada and outside of Canada, and to be supportive of that, would be we need to do that. I think the other thing, just to make sure people are aware, is that like I said earlier, there's a lot of capital here. Some of it sitting on the sidelines right now, and I think we'll still see a gap at the seed stage. So we're continuing to work on making sure that there's capital available there. But I think the other thing to note is that there are a lot of US VCs coming into Canada to look around. And so what I think we want to do is encourage them to come up and have a look, but also to make sure that they're syndicating with other Canadians. So you keep your CCPC status, and you can continue to build a big Canadian company.
Yeah, listen, I couldn't agree with you more. And quite frankly, there is a lot of capital in Canada investing in our companies now. And when you are out there as a founder looking around, there are incredible venture funds now that didn't exist 10, 15 years ago that are existent now, and that can be there to support you. And to Michelle's point, I mean, I was an hour on the phone with one of them the other day from New York, and another one from Ohio that are looking for companies in Canada to invest in. So it's happening, and they want to keep the companies here now because it's so expensive and so mercenary in the Valley. And this is something I learned from Angela Strange at Andreessen Horowitz. She's just like, we don't want them down here. We don't want them on Sand Hill Road. We want to keep them in Canada because the cost of real estate is lower. The talent is robust. They've got families there. The cost of labors. And so this really is, to come full circle, Canada's time to really shine. And the next 5 to 10 years are going to be extraordinary for our country. And I think that everything that you shared today is really a furtherance of that. And the fact that somebody that has been a founder, that has been a VC, that has helped with turnarounds, and who now represents BDC, which is, you know, Canada's Bank for Entrepreneurs, I think that we're all very fortunate to have had your wisdom shared with us. So thank you for being with us. Thank you all for being on the call. Thank you for your very thoughtful questions. And again, we could not be more grateful at Next Canada to have your support and to have you as a partner. So thank you so much, Michelle.
Yeah, thank you. Thanks to everybody. Stay well.